Hawala is a way to send money through a network of trusted brokers. Send a payment through a bank and it might cost you 12%. Hawala can move the same money for 1 or 2%. To see how, let's follow one payment. Karim builds towers in Dubai and sends money home to his family in Pakistan. He hands cash to a local broker and the two of them settle on a code, a short number known only to Karim and that broker. The Dubai broker makes one phone call to a broker in Pakistan. The call is short. Pay out this amount to whoever brings the code. Karim sends the same code to his family. They walk into the second broker's shop and hand it over. The broker in Pakistan counts out the money from his own cash. It is delivered in minutes, and the cash Karim handed over never left the Dubai shop. It is still in the drawer. Nothing crossed between Dubai and Pakistan but a phone call and a code. So, if the cash never moved, how does the broker in Pakistan get his money back? He gets it back, just never from this payment. Karim's cash stays in the Dubai drawer. What the brokers keep instead is a running tally, and it never sits still. All day, money moves the other way too. A family wiring savings out of Pakistan, a trader in Dubai paying for goods. Each of those is a debt in the other direction, so each one knocks the tally down, and no cash crosses for any of them. Payment after payment, the debt chips away on its own. But more goes to Pakistan than comes back, so it never quite hits zero. A gap is always left. That gap is settled in bulk every so often. Sometimes it is one ordinary bank transfer, covering the net of thousands of payments at once. And sometimes it is goods instead. A container of electronics shipped from Dubai squares the same books, and the settlement hides inside ordinary trade. There is a reason the name fits. Hawala is Arabic for transfer, and in the old law books, it meant handing a debt from one person to another. The money never travels, only the leftover does. That is how Hawala pays out the same afternoon for about 1%, while a bank wire takes days. And the strange part, the Pakistan broker already paid out real money, trusting the other to square up later. Nothing forces him to. The whole network sits one broken promise from falling apart. There is no contract here, no court to go to if the money never appears. The whole thing runs on reputation. A broker who fails to pay is finished, cut from a network built on family, hometown, and honor. His good name is the only guarantee there is. And it is enough. Defaults are rare, and fortunes move on a name alone. And that trust is the oldest part of it. Older than the phones, older than the banks, older than you would think. Hawala grew up on the Silk Road, from Cairo through Baghdad, out to Samarkand and Multan, and on the monsoon sea lanes, from Hormuz to India, from Aden down to Mogadishu. Caravans got robbed on those roads, so merchants learned to send money without shipping gold. The method always had three parts. The message went ahead with a courier, sometimes by carrier pigeon. The token was a written note. Examples 1,000 years old survive, found in a Cairo synagogue. The settlement was gold, carried back along the routes. Today, the courier is a phone call, the note is a code, and the gold is a bank transfer. The tools changed, the routes did not. Even the hub only moved down the coast, from Hormuz to Dubai. When Gulf oil boomed in the 1970s, wages flowed home through Hawala, from Riyadh and Kuwait out to Pakistan, India, and Bangladesh. Into Pakistan alone, an estimated $5 to $7 billion a year. Somali families in the United Kingdom and the United States send home more than Somalia gets in foreign aid. When Afghanistan's banks were cut off in 2021, Hawala became the main way money got in. In Syria and Yemen, the banking system broke down. The brokers kept going, and even aid agencies now move relief money through them. For millions, this is simply how money moves. But a network this big, all outside the banks, was bound to run into the law. Remember Karim wiring wages from Dubai to Pakistan? Right now, that payment is against the law. In Pakistan, moving money outside the banks like that is illegal. Pakistan forbids it because it does not need it. Its banks are strong, so it pushes everyone onto them. And the banks give the state what Hawala never will. Control. Hawala keeps no records and slips around the channels a state uses to watch its own currency. The other strong bank countries do the same. India, Bangladesh, and Saudi Arabia forbid it too. But some countries do the opposite and let Hawala register for two different reasons. In Somalia and Afghanistan, banks barely reach. Hawala is the only system they have, so they license it out of necessity. The Emirates has a different reason. As the great trading hub, it registers its brokers directly and regulates them. So everywhere, the unregistered kind stays illegal. The real divide is just how strong a country's banks are. Strong banks, and Hawala is banned. Weak banks, or a giant money hub, and it is licensed. That is the law on paper. In practice, it is losing. Pakistan bans Hawala. Pakistan also receives an estimated $5 to $7 billion a year through it. In Dubai, brokers must register. Many never do. The registered brokers file records with the central bank. The rest keep their own books, and the state never sees those. What stays dark shelters wages. It shelters drug money, sanctioned cash, and bribes just as well. After September 11th, the crackdown went global. Register the brokers, record the transfers, report the customers. It caught some. But a crackdown hits workers first. Criminals have other routes. A laborer sending $200 home does not. All that pressure, and the network is still running. It is faster, it is cheaper, and it reaches where the banks do not. No crackdown has changed that. So tomorrow, in Dubai, another worker will hand cash to a broker. And it will be home by the evening.